What's the best way to reduce debt and grow your investments at the same time? It might seem like a tough balance, but with the right strategies, it's totally doable. In this video, we're going to walk through 7 simple but effective ways to help you get rid of debt while boosting your investment portfolio. Whether you're dealing with credit cards, student loans, or just trying to save more, these tips can help you take control of your finances and start building wealth. Stick around and let's break down these steps that can lead you to a better financial future. Let's get started. 1. Create a budget and stick to it. You ever notice how easy it is to lose track of where your money goes each month? One minute you think you're on top of things, and the next, you're wondering where it all went. That's where creating a budget comes in. A budget is like a simple roadmap for your money, helping you see what's coming in and what's going out. It's not about restricting yourself, but more about giving every dollar a job. When you write everything down, you'll quickly spot areas where you can cut back. Maybe it's those extra streaming services or the daily coffee runs. Whatever it is, small changes add up. The key is sticking to the plan once you've created it. By consistently following your budget, you'll avoid overspending and make steady progress toward paying off debt and building up your investments. So, if you're serious about getting your finances in shape, start with a budget. It's one of the easiest ways to take control of your money and start moving toward your financial goals. 2. Prioritize high-interest debt. You know how credit card bills can sneak up on you. One minute you're just swiping for everyday stuff, and the next thing you know, that balance is out of control. The issue with high-interest debt, like credit cards, is that it can grow so fast if you don't stay on top of it. That's why it's a smart move to tackle these debts first. The best approach here is to focus on what's called the avalanche method. Simply put, this means paying off your highest interest debt first. By doing this, you reduce the amount of interest you end up paying over time, which can save you a lot of money in the long run. The quicker you knock out that high-interest debt, the sooner you'll free up cash for other things. Once you've handled those pesky credit card balances or other high-interest loans, you'll have more money to invest and grow your portfolio. It's a win-win. Less debt and more room to build wealth. Start knocking down those high-interest debts and watch how quickly things start to improve. 3. Automate your savings and investments. Ever notice how easy it is to forget to save money or invest when life gets busy? It's like you have good intentions, but something always comes up. That's where automation comes in and saves the day. When you automate your savings and investments, it's like setting them on autopilot. You don't have to think about it, and before you know it, you're steadily building your financial future. The best part? It's super easy to set up. Most banks and investment platforms let you schedule automatic transfers from your checking account to your savings or investment accounts. Whether it's weekly or monthly, these small, regular contributions add up over time. Plus, when the money is automatically moved before you even see it, you're less likely to spend it impulsively. By making savings and investing a habit through automation, you take out the guesswork and ensure that you're consistently working toward your goals. It's one of the simplest yet most effective ways to stay on track. So go ahead and automate those transfers. You'll thank yourself later when your savings and investments grow without any extra effort. 4. Diversify your investment portfolio. You know how the saying goes, don't put all your eggs in one basket. Well, the same thing applies to investing. If you put all your money into just one stock or one type of investment, you're taking a big risk. That's why diversifying your investment portfolio is so important. It spreads out your risk and helps protect you if one investment doesn't perform well. By investing in a mix of different asset classes, like stocks, bonds, and real estate, you're giving yourself a better chance at more stable returns. For example, if the stock market takes a dip, your bonds or real estate investments might still perform well, balancing things out. It's all about not relying too heavily on one type of investment. Diversification is like creating a safety net for your money. While you might not see huge gains overnight, the long-term benefit is more stability. Over time, a well-diversified portfolio tends to provide smoother returns and reduces the risk of major losses. So, if you're looking for a smart way to grow your wealth, spreading out your investments is the way to go. 5. Use windfalls wisely. Ever get a bonus at work or a nice tax refund and feel tempted to splurge on something fun? It's easy to think about spending extra money when it shows up unexpectedly, but using windfalls wisely can make a big difference in your financial future. Instead of rushing out to buy the latest gadget or taking an expensive vacation, Think about how that money could help you reach your goals faster. One of the best things you can do with unexpected money is put it toward paying off debt. Imagine knocking out a big chunk of high-interest credit card debt with that bonus or refund. That's money you won't have to pay in interest later. Or, if your debts are under control, you could invest that extra cash and watch it grow over time. By using windfalls for debt repayment or investments, you can accelerate your path to financial independence. It might not feel as exciting in the moment as spending it, but in the long run, you'll be glad you made the smart choice. These little financial boosts can push you closer to the goals you've been working hard to achieve. 6. Refinance high-interest loans. Ever feel like you're drowning in high-interest loans? Whether it's student loans, credit cards, or a mortgage, those interest payments can really hold you back. One of the smartest moves you can make is to refinance those loans. It's basically like giving yourself a pay raise by lowering your interest rate, which frees up extra cash every month. When you refinance, you're essentially replacing your old loan with a new one that has better terms, usually a lower interest rate. That means you're paying less in interest over time and keeping more money in your pocket. This can be a game changer, especially if you're trying to pay off other debts or build up your investments. Just be sure to shop around and compare offers to find the best deal for your situation. Refinancing can make a real difference in your overall financial health. By lowering your monthly payments, you'll have extra money to either knock down more debt or put toward growing your investment portfolio. It's a simple step that can help you get ahead faster. 7. Seek professional financial advice. Ever feel like managing your money can get a little overwhelming? With all the different financial decisions you have to make, sometimes it's hard to know if you're on the right track. That's where a financial advisor can be a game changer. They're there to help you figure out the best moves for your specific situation, whether it's creating a plan to pay off debt or fine-tuning your investment strategy. Working with a financial advisor gives you personalized advice that's tailored to your goals. They'll help you map out a clear path to achieve those goals and make sure you're making the most of your money. Plus, they can offer insights that you might not have thought of, especially when it comes to complex decisions like retirement planning or tax strategies. Having an expert in your corner can make a big difference, especially when you're navigating big financial choices. It's an investment in your future that can help you avoid costly mistakes and keep you on track for long-term success. By following these 7 steps, you'll be well on your way to reducing debt and growing your investment portfolio. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss out on more tips from the Money Blueprint. Stay tuned for more ways to improve your financial future.